So I just wanted to go over a trade strategy where you're basically focused on a lot of small trades rather than a 10, 15, 20% option trade. A lot of people on Twitter, Discord, YouTube, like I see a lot of people talking about 30% option trades, 200%. Like all those are great. If you're swing trading and um, if you've done your due diligence and you have like a reason to make those trades, right? But if you want to be day trading, if you want to, I guess, trade a little bit differently, I've been trading in this way where I focus on smaller trades. For example, 5%. That sounds like a small for options. It sounds like it is a small amount. It is a small little trade. Um, for 3,000 for a $3,000 account, 5% gain would just be $150. Um, that's good. It's not amazing, but it is decent. If you were to split up these trades, ideally to minimize that risk, right? You would want to split it up into at least three $1,000 trades. So that'd be three trades of $50 profit each. Um, there's been times where I'm trading, even if it's like a $500 trade or $1,000 trade, and I'm up like $200, and I've stayed in it. Greed gets a hold of your mind, and gives you these irrational thoughts that you can make some crazy amount of money. You can just double this $1,000, which you can. You can do that, but more than likely, you might end up giving those gains back. So this is why I've been trying to focus on these small trades. For example, with a $3,000 account, 5% is 150. But to get that same 150 for a $1,000 account trade, that'd be a 15% gain. That's still doable, but it's a little bit riskier. Now, what I like to do, here I'll pull up, here's ThinkOrSwim. I like to pull up the charts for options. If you don't know how to do that, it is right here. If you click on this trade tab on ThinkOrSwim, and you just click on one of these. Let's do this. Let's do this call, this $100 call. Send it, and it pulls up this chart for the option. Once I started looking at this, it kind of gave me the idea, made me realize just, of course, I always knew options were volatile, but even one of these candles, if we look at that, this candle, that move was a 10% move, 11% move. Like, that is crazy. Like, just seeing this, I realized that there were a lot of opportunities throughout the day, to, as long as you can time it and not get it at the tip top, then you can easily make 4% trades, or 5% trades. And even that 5% trades, if you have a large account, that is risky. So if you had, like, I don't know, $30,000 account, a trade of a 3% trade is still amazing. That, if you were trading sizes of 10,000 a piece, each trade, that'd be a gain of 300, which is so easy to do that, right? A 3% move is nothing. Now, of course, as Murphy's Law goes, what can go wrong will go wrong. and the idea is to minimize the risk as much as possible. I've been trading looking at the MACD mainly. I look at the 1 minute MACD as well as the 5 minute. I use the 5 minute to get a general idea of where it's going. For example, on this one, it has been oversold for a little bit. The RSI has been oversold for a little bit the last, I don't know, 30 minutes or so. And it looks like it's wanting to make a move up. Like it's going to, like the MACD might be crossing over soon. Let's see. Let's look at the 1 minute chart. Yeah, on the 1 minute chart, the MACD has already crossed over. Of course, it's crossed over multiple times. Now, what I would do for this, it's easy to be like, okay, I want to get the best price possible on a call. Here, let's look at the calls. I want to get the best price possible on the call. So I'm going to buy it now before it crosses over on the 5 minute, right? It's close on the 5 minute. Now there is a risk for it being stopped over right here. It looks like there's some resistance right here. There's a risk that it goes up or even on even on this like simple moving average, this blue dotted line, there's like some resistance there. So if I will be looking at buying a call, I'm gonna wait just for that confirmation, just to see that it's gone over that. If you're looking for a 3% trade, let's see, let's do 3%. From here to this resistance, that would easily give you a 3% trade. So let's go ahead and try that and see what happens. Just bought 40. This isn't a real account. This is what is that called? A paper money account. Ideally, I would have waited for a small pullback like it's doing now, just to have gotten a price a little bit lower, because a 3% move on this is just about 4 cents. So from 115 to 119, okay, there it got closed out. That's great. That could have gone wrong. I was kind of hoping that it would just bounce off of this and then go back down. Let's see, but sometimes the market wants to test these boundaries, right? It wants to test these resistance, and if you're aiming for that, at least that could be a good tactic or a strategy. But this is just a little bit of something that I like to do. There's multiple ways to reduce the risk. You could lower your trade size. If you have a $2,000 account, minimize your trades to $500 position sizes, and of course you can lower your expected move. If you don't want to do a 5% move, try to get a 3% move. A 3% move will still give you amazing gains. If you did on a $2,000 account and you were doing 3% trades per week, that is like let's say 5 trades per week, 3% every day, 5 days a week, that's $300. What is that? Let's see, is that 15%? That's amazing. Like most managers would be happy with 15% a year. So to do that in 1 week, it doesn't seem like a lot of money. If one trade you're making $60 off of $2,000, it doesn't sound like a lot, because it could be easy to get in this excitement, or this just being impatient to get these gains, or double your money from 2,000 to 4,000, or to 10,000 or whatever. It's easy to get impatient, it's easy to get greedy. So lowering your expected move size, lowering your trade size, and trading in the MACD direction, in the 1 minute MACD direction, as well as paying attention to the 5 minute MACD. Pay attention to those. There's been times where I'm looking at this and I'm like, okay, I'm gonna buy a put here soon. It's close to this resistance. It's been stopped off there once. The simple moving average, it might be a resistance as well. So I might buy a put here, expecting that move, trying to get the best price possible, trying to get it at the top. And then, I end up losing like 30% or 20%. Options are volatile. 3% trades can be easily done, 5% trades as well. But minimizing your risk if you can. Just try to lower your risk. But anyways, if you want to try this strategy, let me know how it goes for you. Let me know in the comments if you have any criticism, if you think this is a totally dangerous strategy, or it's just dumb or unrealistic. Let me know. I want to know your guys' feedback. If you find success in this, or if you found issues or better ways to improve this, I'd appreciate your feedback. But thanks. Bye.